the crisis of European capital markets and its decline has become kind of an existential threat. That we don't have a Google and we don't have an Amazon is well known for the past decade. But there's a trend emerging over the last couple of years, not only that we are losing 300 billion in money that has been invested in Europe before, but also more and more companies, new ones and established ones, that I have the strong feeling that they can't grow in Europe as much as they can grow in the US. And there's some good evidence to it. If you just look at the rare chip startups or companies that we have in Europe, like ASML, where you see like the US depository receipts are traded much, much more than their original shares here in Europe. And it speaks to a market that is like really struggling to provide that liquidity and that valuation. You have companies like Germany's Linde who moved its listing, or even like last year when the software maker SAP gained to a record, the headlines were not like, hey, this is great, we have a tech company that is doing well. The headlines in Germany were like, oh, when will the time come that SAP thinks about leaving Germany and leaving the DAX and go to New York? So overall, it has become a topic that goes beyond mega cap and goes beyond like just IPOs and innovation. It goes very deep into the markets. It has become a threat to Europe. The companies have the feeling this is not the place to grow, that's not the place to be, and they move elsewhere.
Yeah, so look, as you say, partly it's a sentiment story as well as the mechanics of these markets. So what is the fix, JP? What are regulators looking at to change that dynamic?
Well, there are a couple of things that need to be done, and preferably yesterday and not tomorrow. The first thing is like that regulators are working on what's called a consolidated tape. So that means like that we have a bigger market, bigger overview of liquidity. Because if you look at Europe, you have like 30 exchanges, a dozen clearing houses, compared to the US, very slim and very streamlined infrastructure. So that needs to be consolidated so that people have a better idea where liquidity is and easier to execute big trades. That's one thing. The other thing they're working on is like making listing of companies easier so that you remove the bureaucracy, lots of paperwork, and give companies a chance to go to the stock market, maybe even a little bit earlier and get into that raising money. And then overall, I would say like that's probably the biggest issue. You need to change the sentiment. You need to have like the broader public have a feeling that the stock market is not a casino, that it's a good thing to invest for retirement, to create wealth, that there are good opportunities in Europe and not just in the US. You need to change that sentiment within the C-suite of corporations, that they feel like Europe is a good place to list a company. We can grow it here. We have valuation. We have support. And that's something that needs changing. We're working on it. Is it too little, too late? Time will tell. But the gap to the US market is pretty big, and it will take some time to close it, not to speak about like being on par with them ever.